I've been hearing for years now that General Motors and all of these legacy automakers are going to go bankrupt because everybody's going to be buying electric vehicles. Tesla's going to bankrupt all of these companies by lowering prices. Guess what? We got fourth quarter 2023 earnings numbers from General Motors. We got guidance for 2024, and this company is far from bankrupt. In fact, GM is going to buy back about 20% of their stock and could do the same thing again next year if they want to get aggressive with it. So let's get to the numbers, what we learned about the fourth quarter, and then guidance about 2024, because there are definitely some changes with the company, with their cost structure, with where they're expecting to grow, maybe not going to move into electric vehicles quite as quickly as a lot of investors maybe would have hoped a couple of years ago. But I think that's probably the right move because there's so much money to be made in internal combustion engine vehicles, or ICE vehicles as they're known. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So I'm going to start with the release and the numbers before getting to some of the earnings presentations, just because I think it's important to focus on the numbers first before the narrative. Here's a look at the earnings release. And the first thing they do is General Motors gives guidance, and they reinstituted that guidance for the full year of 2023 after they settled the deal with the union. So there was guidance prior to the strike, and then once the strike happened and it kind of started lasting for a little while, management pulled that back and said, "Hey, we might not be able to hit these numbers if this strike continues for a few months." When the strike was settled, they reinstituted guidance, and this is what those guidance numbers were: net income of 9.1 to 9.7 billion. The actual results for the year, $10.1 billion. I'll get to some of the quarterly numbers in just a second. Those quarterly numbers are going to be a little bit lower. There were costs related to the strike, and then there was costs related to writing down electric vehicle inventory. So those are the two things to keep in mind with at least the fourth quarter numbers. But this is the full year. The other big one that they always report and they give good guidance on is automotive operating cash flow. So this doesn't include the numbers that come from the financing unit or from Cruz, which is a loss generating unit right now. So auto free cash flow expected to be about $20 billion. It was actually $20.8 billion. So at the high end of that guidance. And then adjusted automotive free cash flow, and another thing that they're going to focus on giving guidance for, $11.7 billion for the quarter. So this is a company that's generating a lot of cash, especially when you look at General Motors market value and what investor expectations are. This is just a phenomenal performing company. If you look at guidance for next year or the current year, net income going to be around $10 to $11 billion is what they're expecting. Adjusted automotive free cash flow, $8 to $10 billion, and earnings per share, $8.50 to $9.50. So that's a big increase from 2023. I'm going to get to one of the reasons for that, which is the buybacks that they've been instituting recently. So I'll cover that in a second because that's a really big part of the investment thesis. But you can see that this is not a company that is currently struggling. You wouldn't look at these cash flow numbers and say, man, how are they going to make it through the next year? General Motors is doing really well. I'll show some of the quarterly numbers. The revenue was much better than a lot of investors expected, down slightly from a year ago. But here's where you start to see some of those margins and cost pressures that I talked about with the union and also the EV write-downs. So that's where you get to see, 40, 50% drop in EBIT adjusted margin, auto free cash flow, which is right here, and then adjusted automotive free cash flow, which is down sharply from a year ago. But again, there's a lot of one-time costs that went into that. They talked a lot about that on the conference call, that these are going to be things that are going to improve and sort of be tailwinds on at least a comparison basis in 2024. Now over to the presentation, and I want to just cover some of the highlights because General Motors gives a lot of information here. This is, like I said, a lot about the story, but I do think it's important to kind of keep in mind what we're looking for here. This is not a growth company. This is not a company where if they're growing less than 10%, you're really shocked as an investor. Shares of General Motors are trading for 5-6 times earnings. So just flat revenue and solid cash flow is enough to be a phenomenal investment if they buy back 10-20% of their stock every year or issue special dividends, things like that. So that's why total company revenue grew around 10% year over year in 2023. Not telling you that's not a company that's losing market share. In fact, they said it right here. Market share was up slightly in the quarter. number one in total sales, number one in truck sales, number one in full-size SUVs. This is where the money is made in the auto market in the US. It's made in trucks and SUVs. So this is the reason to own General Motors, is they are the leader in that space. And then this is the big thing right here. November, they announced an accelerated share purchase program, $10 billion. They already executed $6.8 billion of that. That was on a single day, just a few days after this was announced. So they said that at the end of the quarter, the share count was about 1.2 billion shares, and they're on the way to potentially get to 1 billion shares outstanding in the foreseeable future. Given the current stock price, that would put GM at a market cap of under $40 billion. You can see that this is not adjusted yet, but we got a $52 billion market cap on Google Finance. It's going to be much lower than that when they adjust to the current end of quarter shares outstanding. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. GM has a number of ICE launches expected in 2024. So these are going to be, again, this is the cash flow of the business. These are the really popular vehicles. If you live in the Midwest like I do, you see these all over the place. They're also not giving up on electric vehicles. There's been a number of changes to their EV strategy. They're really pulling back on kind of going all in. But I think you see some really compelling options here. Now, we'll see if they're able to adjust to what consumer demand is, what dealers are telling them. But I think if you just see growth in the EV market for GM and sort of push them down that learning curve, that's going to be a positive for the company. They've taken a lot of cost out of this business, and they really talked a lot about simplifying the options that they're giving to consumers. If you think about a competitor like Tesla, you don't go into Tesla and have 1,000 different combinations of products that you can make with all kinds of different trim levels and add-ons. That's stuff that has kind of bloated the auto industry for a very long time. They're pulling back on some of that, not only in the ICE side, but also in the EV side. If they can hit this starting MSRP of $35,000 for the Equinox EV, I think this one's going to be very interesting to watch, because this will compete with the Model Y and will put it on really a competitive price point with that. So if they can get to break even with these vehicles, I think that would be a great step forward for the future. Also expanding that public charging. Access to Tesla superchargers is in the first half of 2024. So that's going to eliminate one of those differentiation points that Tesla has. And there are 30,000 high-powered chargers as part of a major collaboration that they have. So tons of access to chargers moving forward with EVs. Remember, EVs are the nice upside in the future. You want all the cash flow to come from those trucks and SUVs today. Some of their flexibility is in building both of those vehicles on the same manufacturing line. So again, we'll see how this goes, but this should allow more flexibility with building internal combustion engine vehicles that are profitable, and also moving to the EV market where they need to grow in the future. Cruz was a big question for me. If you are familiar with this channel, you know that this is where I see the most upside. Now, the value of the business is in the current core business. So that's sort of like your downside protection. But if this is going to be a 10x stock, an asymmetric stock, it's going to be because Cruz is successful. Cruz was obviously pulled off the road in October. I've highlighted some of these problems in previous videos, but it seems that GM is still committed to making Cruz a successful business long term. They're going to revamp some of their things that they're doing. They're going to expand in a single city first and really prove things out, rather than trying to expand in 20 different markets all at once. So I think there's going to be more to come here, but they did say that they're committed to Cruz. There's a lot of questions about financing because the current cash burn rate for Cruz would mean that they need to raise money within the next year. So a lot more to come there, but I was happy to hear that at least Cruz is part of the future plans. And then again, these are the guidance numbers. I covered most of these. There's major investments in the future, so $10.5 to $11.5 billion in capital expenditures in this battery joint venture. So continuing to invest in the future while still generating billions of dollars worth of cash flow. This is a look at their adjusted EBITDA walk. The gray is from calendar year 2022. Blue is calendar year 2023. So you can see that GM North America down slightly, GM International up slightly, financial still generating positive returns. Cruz is your big negative number here, and then corporate and elimination. So that's where you get to the total EBIT adjusted of $12.4 billion for the year. Add all of this up, and I think you're seeing at least positive trends for General Motors. The company isn't turning south. They're not losing market share to EV upstarts like Tesla. And now, as Tesla is seeing margin pressure, this is what we saw last week when they reported earnings. There's a lot of pressure on their business. Their margins have been declining for about a year now. And we're not seeing the same trends with General Motors. Yes, there were some one time challenges in the fourth quarter, but given the guidance numbers, I think we're still going to see really strong cash flow from General Motors in the major buyback program, $10 billion that was announced in November. That could become the norm. There was a bunch of questions about that on the conference call. And management basically said, yeah, we would be willing to use the cash that we have over a $20 billion line on the balance sheet. That was kind of the benchmark that they set. We want to keep $20 billion of cash on the balance sheet, but anything above that, we might as well put it into buybacks. So I could see if the stock price doesn't move significantly higher, they could do another accelerated share repurchase program in 2024 on top of what was already left from earlier repurchase programs. So I like where GM is sitting. I think the value is just phenomenal. I don't think the ICE vehicle business is going anywhere. I think it's going to continue to be a cash cow for much longer than the market thinks. They're investing in electric vehicles. Don't know exactly what the future is there, but I think GM probably plays a pretty significant role, at least gets to break even. That's what they need to do in EVs. And then Cruz provides optionality for the future. Don't know exactly what that looks like, but pure upside given the price of the stock. So I like what I saw from General Motors. This is a stock that I own shares in. Love to hear your comments about GM and the dynamics in the auto industry today. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.